All attendees are in listen-only mode.
Welcome everybody to this exciting webinar that we are presenting to you today. This is going to be an action-packed 60 minutes, so if you are multitasking, make sure you come back to your computer screen. You are not going to want to miss a second of this presentation. It's going to be a two-part presentation. We have a dynamic presentation provided to you by two experts from Quicken Loans Mortgage Services, and we've also got an expert on direct mail marketing from overflowworks.com. Our presenters today are recognized experts nationwide. You have maybe heard of them already. Todd Cart and Sean O'Brien from Quicken Loans Mortgage Services have got a combined 30 years of wholesale and retail mortgage experience, so billions of loans funded under Quicken Loans Mortgage Services, and they are going to wow you with some new products. And just to make sure that you're aware, this is Quicken Loans Mortgage Services, the wholesale division, and they're going to wow you with some great information, some unique tactics that you can use to generate more closed loans. And then we're going to talk about direct mail marketing and how to convert some of these opportunities into some more incoming leads and some incoming phone calls. Jeff Bush has got 20 years of direct marketing experience. He's got over 1 billion direct mail pieces mailed for mortgage industry professionals, and he's also been in the game. So he understands this at a high level, and he's also been a mortgage call center expert. So if you are running a high-volume shop, or maybe you're just at the point where you're ready to expand, Jeff Bush is going to be able to give you some great details on how to go about growing your organization with direct mail marketing and these exciting, unique programs from Quicken Loans Mortgage Services. So first we're going to start off with introducing Todd Cart. Todd is the VP of Business Development. Todd, we are so excited that you are here today and to really give us this inside scoop on what Quicken Loans Mortgage Services is doing and how it's engineering to amaze mortgage professionals nationwide.
Well, we appreciate the introduction. Again, this is Todd Cart, VP of Business Development. Our Quicken Loans Mortgage Services wholesale and correspondent division is up and coming to be a top lender in the country. We work with community banks, credit unions, mortgage brokers, and mortgage bankers. And we have started this division about 5 years ago. And on the call with me, and I'll let him talk, we also have one of our senior, most experienced account executives, Sean O'Brien, who is out in the field daily. He's in our Chicago market. Sean?
Hi, Todd. Hello, everyone. Thank you for joining us today. We're going to take some time to just share a couple ideas with you. We are going to highlight a few niche programs that, when uniquely used and positioned, will help you find loans, find opportunities, help your borrowers, and this will all be able to be used to show you how to, in addition, use Overflow and use their services to find more loans and more business out there. So all we're going to do today is we're going to focus on 3 very unique areas of loan type that are specific to things that Quicken Loans Mortgage Services is doing. Many of these you will not have access to out there in the marketplace, as they are unique and specific to Quicken. But you can use these and any other type of a loan program in conjunction with the services and features that Overflow offers to find more borrowers out in the marketplace. And that's what today is going to be, to show you how can you use some of these unique niches and products, couple that with the services that Overflow uses and offers you to find more borrowers and help more borrowers out in the marketplace. So starting with one of the 3 programs we're going to highlight today is the unique LPMI program that Quicken Loans offers. So lender-paid mortgage insurance, some people understand it, some people don't, but the reason that this is so unique right now with Quicken Loans is that Quicken Loans has a very unique pricing schedule for these types of loans. So much so that when utilizing Quicken Loans lender-paid mortgage insurance options, lender-paid mortgage insurance now becomes and makes a lot more sense for the borrower when looking at their loan options. So to give you an example, taking a look at a few snippets from our rate card, we're focusing here a little bit on the purchase money, but if you take a look at the 95% loan to value with a 740 score. Good scored borrower, high LTV. They're putting the minimum down at 5%. If you take a look at our rate or our adjustment on that, you see it's at 1.5. For those of you that are familiar with LPMI, you know that that's typically 2.15 or greater with most other MI rate cards. In addition, one of the things that you'll notice when you look at the terms, you'll see 26 to 30, which we'll talk about what that means in a minute, but you also see 5, 7, 10-year ARMs. And the reason that's important is some, not all, but some will also add on an additional 10, 15, 20 basis points if you're doing an ARM. With Quicken Loans, fixed or ARM, you're looking at the same pricing. So this is very unique when you take a look at some of these adjustments, because what that allows you to do is incorporate lender-paid mortgage insurance into a loan for a borrower so that they don't have a monthly mortgage payment. Take a look at it. By far, probably one of the most popular programs that we're seeing on this LPMI right now is that 90% bucket with a good score, 740 or better, and you see that adjustment's only 0.875. With most others, that adjustment's going to be 1.37 or greater. On top of that, couple it with a 7-year ARM, specifically and usually because you only qualify at the start rate. You don't have to add on to qualify. But more importantly, statistically speaking, most people are out of their loans or their homes or their refinancing within 7 years, so a 7-year option is a great alternative, especially on the purchase, especially for a first-time home buyer. And when you look at that 0.875 as opposed to a 137 or greater plus another hit for an ARM, you find that you're getting into a loan where maybe the rate is only an eighth higher to cover the LPMI, maybe a quarter, but overall, your payments are lower.
Well, Sean, just to interrupt really quick, for some of those, we got just a bunch of people on this webinar right now, and I just wanted to make sure that everybody knew that we're talking to Sean O'Brien right now from Quicken Loans Mortgage Services, an expert in the wholesale mortgages, and he's explaining this new LPMI program that Quicken Loans Mortgage Services is offering. And if you have questions, we're going to make sure we get some Q&A time at the end of the webinar. So we're going to use the control panel in the GoToWebinar control panel to be able to chat messages in. So as you're coming up with questions, Todd and Sean are covering some great information. So as you're coming up with questions, fire those off, and I'll be able to ask those in the order in which they're received as soon as we get a break. Go ahead, Sean.
Thanks so much for throwing that out there, everybody. So yeah, please, if any questions or whatever, don't hesitate. But looking at the next slide, what LPMI does, because again, a lot of loan officers, a lot of people still don't really understand how to use LPMI or the benefits to it. But what we put together here are just a few of the ideas of some of the benefits. It's especially important in this new QM world because with LPMI, it's already factored into your loan level price adjustment. So it could help you in a QM points and fees test. Secondly, right now, with the tax deductibility of monthly paid MI, you might find some advantages where with LPMI, because it's factored into your rate, you might see some advantages from a tax savings perspective. Number 3 here, LPMI in today's leading environment. Again, back to some of the QM ideas. Number 4, more buying power, because what you will see when you do some examples of LPMI, which I'm going to show you next, is that in most cases, that borrower is going to see a lower monthly payment as opposed to using a monthly mortgage insurance. So we'll show you some examples here, but to add to some of these examples or some of these benefits, if any of you have done purchases or loans with mortgage insurance, you'll know borrowers they don't like paying monthly mortgage insurance. It's pretty universally felt. Most people would rather not pay a monthly mortgage insurance. So this is an alternative to offer them where you can show them a lower payment without having to have a monthly payment for that mortgage insurance. Some of the other real common uses that people and some of our current partners are using this program for right now, because of the significantly reduced pricing on it, is having the ability to go back and look at some loans that they've done over the last year or maybe even 2. And it doesn't necessarily have to be a conventional loan. So yeah, you might first and foremost think, hey, I did this conforming loan. I did it last year. We did 95 LTV with monthly mortgage insurance. They might benefit from taking a look and refinancing that into a lender-paid scenario and reducing their payment. But where we're seeing a lot of pickup is in those FHA loans that were done maybe a year, maybe even 2 years ago, where now they might have the LTV at a 90 or 95% loan to value. Maybe their scores have increased to where it makes sense to look at flipping that loan or refinancing that loan over to a conforming loan with LPMI to get them out of their FHA mortgage insurance, especially since that mortgage insurance rate hike that went up last year. So these are some of the advantages or some of the uses that you can use this LPMI program.
Well, quick question here, Sean, is that there was somebody that asked a question about, is this program available for non-Quicken originators? And I just want to make sure that everybody knew that this is the wholesale division. Some of you are already currently approved as Quicken Loans mortgage services approved brokers and bankers. This particular webinar is going to be designed for everyone that wants to work with the wholesale division. You want to talk a little bit more about that, Sean?
Sure, I'll hit on that for you real quickly, and I'll answer that in 2 parts. Number 1, LPMI is available for anyone out in the marketplace. This particular LPMI program and pricing is specific to Quicken Loans partners. So you will not be able to get this type of lender-paid mortgage insurance with this type of adjustments anywhere else. So yes, on one hand, it is specific to Quicken, but LPMI in general is available to anybody.
Great.
So the next type of a niche program or opportunity that I want to talk with you about is what Quicken Loans refers to as the Yorgage. You may have heard this term out there, you may not have, but simply put, what the Yorgage program is that Quicken Loans has the ability on a conforming loan to do any term between 8 and 30 years. So you can amortize a loan at 8 years, at 27 years, at 23 years. And this is a very important and beneficial tool to be able to have access to, because anybody that's been doing loans for any significant period of time will have had that borrower at some point that did not want to extend their term. They've been in their loan for 7 years, they want to refinance, but they don't want to go back to a 30-year term. And what most will do is set it up as a 30-year or a 25-year and say, hey, we have to do this term, but just make this payment and you'll be done in 23 years. Sounds great, but we know borrowers, we know people, if it's not what they're supposed to do, typically they tend not to do it. So the benefit of being able to do a Yorgage program is you can put them on that specific amortization. That type of an amortization will save them money over the life of the loan. It might be able to pay off the mortgage sooner, because what you can use this program for as well is they can be in a current loan and mortgage that has a specific payment. You can back into a term by saying, look, we're going to refinance, we're going to get you a lower rate, but let's keep your payment. You're comfortable with the payment, you can afford the payment, and if you keep paying the exact payment you're making, you'll have this loan paid off in 17 years, and you'll cut off so many years off of your mortgage, which will eventually save you a lot of money over the life of your loan. So it's a benefit to be able to do this. Most people think of the Yorgage for a refinance situation. But one thing I want to introduce to the people on the call today, whether you're a partner of ours currently or not, is what I will describe as what is called the 29-year purchase mortgage. And the reason I say that is, here's a way to differentiate yourself, because this is another way that this type of a program will help you differentiate yourself from any other loan officer out in the marketplace, not only with your borrowers, but most importantly, with your referral sources. So let's go to the next page. The 29-year fixed purchase, and what I'm talking about here is, let's say you go to that borrower and you talk with them about, you know, we're looking at a 30-year fixed mortgage, here's your payments, here's what you do, but what if you put them on a 29-year mortgage? These examples I'm showing you here, these are, you know, based on the same types of rates, and the rate doesn't really matter, but what I'm getting at is, no matter the loan size, 100,000, 200,000, 300,000, the borrower's not going to notice the difference in payment. And what I mean by that is, if they have a $100,000 loan, $8 more a month, it's not going to hurt them. They're not going to say, oh, I can't afford the loan now. A $300,000 loan, even though it's $25 more a month, if somebody can afford a $300,000 loan, they're probably not going to notice the difference in payment of $25 a month. However, the savings they may see by simply shaving off that 1 year can be very significant. If you look at a $300,000 loan, you're saving over $9,500 over the life of that loan by just simply shaving off 1 year. And the differentiation comes in that nobody else is showing these options to your borrowers. Now you're consulting, you're not just taking an order. But not only with your borrowers, think about your referral sources, and let's specifically talk about a realtor. Hey, Mr. Realtor, are you currently offering or talking to your potential buyers about the 29-year fixed mortgage? Most realtors will say, I've never heard of that program. What is it? The minute you can get a realtor or a referral source to say they have never heard of something, essentially, they're now your realtor because you have something they don't have. So this is a way to use it, and the only objection typically that could come up to not doing a 29-year mortgage is, I'm not going to be in my house that long. And what that opens the door for you now is, then why are we even talking about a 30-year mortgage? Let's look at a 7 or a 10-year ARM, significantly lower rate, you'll save even more money, and again, you are consulting, not just filling an order. So just another idea how you can differentiate yourself and use some of these unique products or programs to help separate yourself from others out there.
Hey, Sean, real quick question. I got a quick question from Eric. He wants to know if the Yorgage is available on FHA products or just conventional.
This is conventional, conforming loans only. FHA does not allow for unique terms. So FHA is very set in their ways. FHA and VA, you have to have specific terms. So no, this is a conforming loan only.
Great. And if I can call on Todd to check his chat message. Todd, there's a question that I'd like for you to respond to via chat message. And then there's another question here just in regards to Quicken Loans mortgage services. What percentage of your volume are variable Yorgage loans? Do you have any idea?
No, it's probably a smaller percentage. Our Yorgages are typically the fixed only, just because right now the fixed rates are, just as low, and they're great rates. So it's a very small amount on the Yorgage adjustables right now.
Great. Awesome. Well, continue on, Sean. You want to talk about waiving escrows?
Yeah, so the last product or program that I'm going to talk about, again, back to that niche and how to find some opportunity, to open up the rest of the conversation here today, is as it relates to waiving escrows. Again, a very unique opportunity with Quicken Loans in that Quicken Loans will allow a borrower to waive escrows up to 90%. Now, there are some states where things are a little bit different, but in general, most lenders will not allow a borrower to waive escrows above 80%. There may be some outliers here and there, but the general consensus is this is very unique opportunity to be able to, again, cater to a borrower. Again, back to anybody that's been doing this for some time has had that borrower that is just adamant that they do not want to escrow their taxes and insurance for whatever reason. Their belief, they want to earn the interest, the last banks messed it up on them. This gives you the opportunity to do something, again, that nobody else, for the most part, is able to offer. So the ability to waive escrows up to 90% on a conforming loan, again, this is conforming only because FHA and VA are different and have their specific guidelines. But this opens up some opportunity for you. Currently, there are states that not only can you waive the escrows to 90%, but there's no adjustment, there's no fee for doing that. So you'll see that list of states here right now. In general, the first 5, there's not an adjustment to do it anyways, but then there's also the other 4 that we currently have a pricing advantage that we're not charging for those escrow waivers in those states. So not only can you waive escrows at 90%, there's no adjustment to do it. So it's basically free to do that type of adjustment. Now, take all of these ideas and lump them together. You can do a 29-year mortgage with lender-paid mortgage insurance at 90 LTV and waive escrows. Who else are you able to take that type of a loan to? If you go into your realtor's office and say, hey, are you guys doing a 90 LTV loan with lender-paid mortgage insurance at the reduced pricing, so there's no monthly mortgage insurance to your borrowers, and waiving escrows? Most realtors or most referral sources will tell you that's not able to be done. And here you are telling them, I do it every day. Again, creating opportunity, creating uniqueness, and getting your foot in the door with those referral sources to offer something that nobody else is able to do for the most part. So these are just some of the ideas that you can use. And again, I just plucked 3 very unique programs. You can do this with any program to funnel over to some of the services that Overflow offers and how you can find these opportunities. And that's where Overflow is going to talk with you a little bit further to show you how do you find these? How do you get to these opportunities? And how can you go find them and market them in the marketplace?
Great. Thanks so much, Sean, for your expertise. And what an exciting opportunity that mortgage professionals have to go out there and leverage this unique product in the marketplace. We're going to transition into our second part of our presentation, but stick around if you have mortgage-specific related questions for the Quicken Loans professionals, and we will answer some Q&A questions as soon as the marketing portion is done. But right now, we're going to bring in Jeff Bush. Jeff is known nationwide for his magnificent mortgage marketing. He has serviced some of the top producing mortgage professionals in the marketplace, and obviously just in combining with Quicken Loans Mortgage Services is that he networks and hangs out with some power players. Jeff, thanks so much for being on the webinar and sharing some of your insider secrets on how to make the phones ring and the leads come in. So talk to us a little bit more about some direct mail marketing basics, and then let's get into some real test cases of some things that are making the phones ring for people.
Yeah, thanks for having me on the call today, Dave. We're going to go through some strong ideas here to make the phones ring from borrowers who can actually fund loans. Making the phones ring is first importance, but equally important is conversion and making sure that people calling you can actually close a loan and see some benefit. So the first slide we've got up here, 40% of success in mortgage direct mail is based on the mailing list. So I'm going to talk, more about the mailing list than the pretty mail piece. The other 40% is based on the offer, and I'll say making the right offer to the right list is where direct mail works. And then the remaining, 20% is based on the type of mailer you send, whether you do a letter, a postcard, whether you put color on it or a picture on it. And it seems like a lot of people get confused and invest all their time working on the mail piece and what it looks like. They don't spend enough time on the data and creating the right offer to the right data. That's where we can double and triple response rates on direct mail for a lot of mortgage clients. So that's kind of what we're going to go through. So this next slide is going to be a copy of a live database, I think out of Virginia, that kind of shows how we're pulling this data to make sure we can, get benefit out of these people can save money by refinancing.
I'm bringing that up right now, Jeff, and this is live data from Virginia, you did say, right?
Yes. So just some sample random data. So if you look at this slide, what we've done in our database, our homeowner database, is we've got the first name on the list, Aaron, who lives in Virginia Beach. He funded an FHA loan back in February of 2011. His loan amount was $170,000. The FHA interest rate for that month and year from HUD was 4.59%, so we have a pretty good idea of what interest rate he's paying. We know exactly what his mortgage insurance premium, what he's paying every month on mortgage insurance. So what we do is create, what his current payment is, what his MI is. His old payment's $998. Well, we show him a 5/1 ARM at 3 1/4 is what this one was based on. And we show him a $740 payment, which is $258 a month savings. And then we show him how much he's going to save per year by refinancing on this program. So this is a copy of the data, and you can see the yearly savings on some of these people. There is some, I guess what you call an FHA jumbo or jumbo conforming loan in here where someone's going to save $14,000 a year by refinancing. You can see these numbers in the far right column. The yearly savings is huge. So we put a lot of time into building this database with interest rates, mortgage insurance premiums, so we can really target into our letter some specific payment savings for these borrowers and make that phone ring and make sure we're mailing people that have a huge benefit. So this data is going to get populated into the letter, all these custom fields that we've built. So we can go ahead and go to the next slide, which I think might show one of the letters.
Yeah, I'll go ahead and bring that up. And if you have direct mail marketing questions and you want more specific information, please send a chat message over and I'll ask those to Jeff in the order in which they're received. We're getting a lot of questions coming in, but if your questions don't get answered during the webinar, be sure to know that there will be a follow-up opportunity, and the individuals that are being the panelists on today's webinar will follow up with you immediately after the event.
So I'm going to go through a few elements on this letter and what makes it work so well. I mean, I've done hundreds of millions of direct mail letters for the mortgage business over 20 years, and one thing I've learned is the more specific you can be in talking to these people, the better your response. So top left corner, this is the FHA conversion program, which I kind of named that about a year ago when we first started doing this mail. We want to convert them out of an FHA loan into a conventional loan. So we show this in a window envelope, FHA conversion program for Murrieta, California residents, elimination of mortgage insurance. You know, we toll-free number the mailer so we can track it and record phone calls, customer ID codes, so you can pull the customer's name up in the data when they call you and talk about all these numbers that are on the mail piece. But you can see, you know, if your mortgage balance is around, you know, $200,000, here's what you're currently paying for payment for mortgage insurance and your total payment. Here's what we can do if you refinance, your new mortgage payment, no monthly mortgage insurance, and your total new payment. And then we show them, you know, hey, Jeff, that's a monthly savings of blank and a yearly savings of blank, and, you know, stop throwing your money away in expensive mortgage insurance. So this is, you know, one of the letters that's been real successful for us. You know, call this toll-free number. So we're hitting on a bunch of things. At the bottom of the letter, Dave, I know it's kind of blown up right now, we have a little cash-out offer. A lot of these FHA borrowers that have 20–25% equity in their property, they want cash out. They've rung up their credit card bills, fixing up the house, you know, Home Depot credit cards. I mean, they've got some debt, you know, putting window coverings in when they bought their house and blinds. I mean, they're putting the backyard in, so they have some debt. So we take their $200,000 loan amount and say, hey, we'll give you, you know, up to 10% cash out, so $20,000 in cash for only, you know, whatever the number is, $89 a month, which is real attractive. So they're either calling to lower their payment, calling to get out of MI, or they're calling for some cash. And those three things, you know, a lot of different directions to take these phone calls, a lot of benefit for these people. So that's kind of the elements of the letter. This is a more expensive letter, legal size, colored, double window, 6x9 envelope. So it's one of our more expensive packages, but for a few cents more, if you can double your response rate, it works. I'll go down to some cheaper mailers. You can show the next slide, Dave.
Hey, Jeff, quick question from the audience is that in terms of how you know when the FHA case number was pulled, did you make reference to that, or is that something that you can follow up with people after the event on?
Our database is all based on when the loan recorded. I know the endorsement can happen, like 30 days later, so it's not perfect, but it's as close as you're going to get to perfect. I mean, I'm not looking at endorsement dates and when FHA bought the loan, but I'm looking at when it was recorded and what interest rates and what MI was on that particular month and year. I think that answers that question.
Great. Thanks so much.
So this is kind of a different looking envelope. It's large, it's double window. It's expensive, but it works really well. It just looks different than a lot of other things out there, so we get a huge response rate. I mean, right now, I talk to hundreds of mortgage lenders that do direct mail every month, and I would say the average response rate in the nation right now, if you send out 10,000 letters, especially if you go to some older beat-up data like FHA Streamlines or VA Streamlines, people are getting around 30 phone calls on a 10,000 piece mailer, a 0.3 response rate. And it's hard to make money at a 0.3 response rate. I know guys that are doing it and mailing hundreds of thousands of letters and still making money, but it's a small margin for error. You better have some good loan officers that are really good at converting these calls, because you're not going to get a lot of calls. We're seeing anywhere from 50 to 100 phone calls on 10,000 mailers, 0.5% to 1%. I've got probably about 15 clients doing this around the country that are all experiencing minimum 0.5%. A little over 1% is our best. So just a great overall mailer. You can go to the next slide. We'll just run through a couple more mail pieces that are a little cheaper and almost as effective as the other one we just showed.
Jeff, there's always the question about data exclusivity. Would you mind addressing that before we move on to the next Envoy letter?
Well, we've got 900,000 records in America right now that we can mail to for a great response and conversion. So we're careful not to mail the same letter the same week for 2 lenders. You know, if you mail 10,000 pieces, we suppress that data and don't let anybody else mail it for 90 days. So we have a pretty complex data system that keeps track of who's mailing what and making sure, you know, we want to get our clients a good response and not mail old data or someone else's data. So we're pretty good about that.
And Jeff, can you address the issue about cost per funded loan? You know, as somebody that's been doing this thing for a long, long time, you know the cost per funded loan is really important. But what are you seeing right now in today's competitive marketplace?
Great question. So cost per funded loan, we tell people, hey, it's anywhere from $500 to $1,500. We think if we can hit an average cost per funded loan of $1,000 and your average loan amount's $200,000, that's 50 basis points, 0.5 point for marketing. That's a pretty real number. Now, if you want to go in and go do a small mailing and pick up 5 loans, we might be able to get your cost per funded loan down to $500. But if you want 20, 40, 50, 100, 500 loans a month, realistically, it's going to be $1,000 a loan. So a lot of our clients, you know, pay a little bit less commission to the loan officer to be able to afford that big $1,000 loan marketing cost. So, you know, a lot of times we've been coming in at $700, $800, $900 on this campaign, and our clients are ecstatic because they were paying $1,500, $2,000, you know, on other mail campaigns that just aren't working. So,
Jeff, another quick question. Yeah, the questions are just coming in too fast, but I think that they're really important. But you've done some combination marketing for individuals that have large past client databases, just addressing what Sean was talking about earlier about reaching out to some of those past clients and getting them refinanced. Can you talk a little bit more about what you've done, not only in past client marketing and some of the new lead generation, as well as talking maybe about email marketing?
Sure. So our minimums for mail are typically 5,000, 10,000 pieces of mail being sent out, and usually, you know, people don't have 5,000, 10,000 customers they funded loans for. But if somebody wanted to send us a database of 1,000 people of loans they funded over the last couple of years, we could do a handwritten direct mail campaign that would get a huge response rate, 3, 4, 5% response with a real first-class stamp on it. So we could do something like that. We also offer services where we can append email addresses that match your borrower's file, so we can do email campaigns and get you email addresses, direct mail, that whole deal. I could talk to somebody more specific about that on a conference call if they want to set something up with us.
Yeah, and before you continue on, I want to call on Todd just really quick. Todd, would you address just a little bit more about some of the current approved partners that are on this call right now, just some of the responses that you've had with some of your other partners in using the direct mail marketing from Overflow?
Yeah, absolutely. We have some of the folks on the call are approved with Quicken Loans Mortgage Services, and I know that they currently have done some direct marketing mail with Overflow Works. From what I've been told, it's been great responses. The mail pieces are excellent. We've also gotten a few loans in as a direct result of paying off the FHA or converting the FHA. So it's been great. You know, I've been out in the field, I travel, and just been talking about it. And so to our approved partners, if you have not tried or used Overflow Works, I can tell you from our approved partners that do use them, it's been wonderful, and it's been a great response.
Great. Go ahead, Jeff.
So here's another simple letter. I mean, we say in the mortgage direct mail business that tricky is better than pretty. You know, this is an ugly letter. people wouldn't think something like this would work. It's really cheap, and when we get down to 49, 59 cents a piece all in for postage, data, direct mail, toll-free phone number, printing, and this mailer gets a huge response rate. I mean, it's just been real successful for us. It's very simple. We don't like to say a whole lot. It's a quick read. With direct mail, you've got 5 seconds from, well, first try to get them to open it, and this little outside panel, important information about your FHA mortgage insurance, that gets them to open it. And then once they open it, you got 5 seconds to see if there's anything in there that they might want to call you about. So we hit them with, here's your current payment, here's your new payment, here's how much money you can save, call us. And it's just one of our more successful mailers, just cheap, simple, down and dirty, and it just makes the phone ring. It's been great. So this is a snap pack mailer. It doesn't go in an envelope, folds up, tear it, glue it type of thing.
Hey, Jeff.
The outside of the snap pack, yes.
There's a lot of questions asking which mail piece is getting the best response and some issues about compliance. Can you address that as you're covering these particular mailers?
Sure. So we have multiple letters signed off by legal compliance, in our arsenal of samples. Some clients are a little more aggressive and like to push the envelope a little, and some are like, hey, we don't want the CFPB calling us. We need to make sure this thing's signed off by everyone. So I've got all different variations of compliant letters that have been signed off by huge mortgage companies around the country. And we can give some direction on that. We know what the laws are and what we can say and not say, and we encourage everyone to follow all the laws and try to. It's tough because if you dot every I, cross every T, you get a little bit less response rate, and people just need to know going in if they're going to, not be aggressive on what interest rate they're offering. They're going to get a few less calls, and we can kind of direct you on that again, and maybe on a conference call, go through all that. What was the other question, Dave? It was
compliance on marketing and just APR and your truth in lending disclosures.
Yeah, interest rate, APR, full disclosure of the loan. If you're going to advertise a 5-year fix, you got to put it in the disclaimer. It's a 5-year fix. Here's the caps. Here's the reset date. All that's got to be in there, and we have a lot of sample mail pieces. We can show you 3 or 4 mail pieces and kind of give you, hey, here's the best response, here's the worst response, but obviously if somebody calls us, we're going to give them our best mail pieces. Just if you want color, if you want legal size, double window envelope, I mean, those can get up into the 60, 70 cent range, where something like this can be high 40s, high 50s. So, 20% more in mail cost, but if you get 50% more response, obviously you're looking at overall best at the end of the day. So.
Great. Jeff, you want to talk about this FHA conversion letter before we move on?
Yeah, so here's another example of just mailing to these FH borrowers, telling them get out of your expensive mortgage insurance. Look what you're paying every month in payment, and look what we can do for you on a refinance. And one of my clients came up with this little interesting fact box, which was interesting. A lot of these borrowers that are calling on these letters, or maybe the ones that aren't calling, are assuming that after 5 years and 78% loan to value, they're automatically going to drop their MI. They just think that somebody waves the magic wand and it's all going to happen. But so they're really, these FHA borrowers are kind of confused on MI and when it comes off, and they don't really understand. So we put this little box on that really lifted our response, showing people it might take 9 to 11 years to remove your MI. If you don't do something now, when property values are high, I mean, people have equity right now. We don't know how much longer that's going to last. We're starting to see a level out on pricing, and so that really lifted our response and got more people to call, which was interesting. So.
Great. A couple other questions, Jeff, just in terms of minimum orders to test some of the marketing. I know you're going to talk to them about something that they can take advantage of right at the end of this webinar, but is there anything you want to address right now just in terms of what your minimum order is to get the response rate that you like to have and to continue to prove that your marketing is generating the leads that they're looking for?
Well, most of our clients are mortgage companies, owners, brokers, correspondent, branches for big companies. So we typically will send out, 10,000 mailers for somewhere around $6,200, and we'll generate 50 do 100 inbound phone calls, and depending on who's taking those phone calls and what products they have, if they've got all these niche products like what Quicken was talking about here, lender paid MI loans, you know, they'll close anywhere from 10 to 20% of their phone calls. So we're talking, you know, $6,200 to go get 10 loans funded. That'd be $620 a loan. It's kind of some averages, and we can talk more specific about, hey, what states are you licensed in? You know, there's different response rates based on the state. California's, you know, half the response than North Carolina, for example. So we can talk about states and response rates and how much data is out there. And we're looking at every county in the United States on appreciation. Some counties are a lot higher than others. I'll mention something. We still do a lot of FHA VA streamlined mailers. Here's an example of something we did for SunWest. You know, just say no. No appraisal, no closing costs, no points, no income, no FICO. So we still do some streamlined mailers, but the challenge is, you know, we're getting 30 to maybe 40 calls on a 10,000 piece mailing. They're still closing loans and making money on these campaigns. It's just, we say that FHA VA streamlined pond is overfished.
Yeah. Really quick, Jeff, I did message out everybody in the chat message information for Quicken Loans Mortgage Services and how to be able to get in touch with those individuals, Sean and Todd. So if you look in the chat window, you can get that contact information for Todd Cart, and he can get you in touch with Sean O'Brien. Jeff, do you want to talk about this SunWest document, or you want to move on to the next one?
I just wanted to show a couple variations. I mean, we do streamline mailers. We do consolidate your second mortgage. I've got reverse clients that are marketing for reverse mortgage loans. So we can do any kind of mortgage direct mail marketing. It's just we're kind of specifically talking about one of our better ones right here, the FHA conversion letter. Up on the screen now is a sample email. We started doing some email marketing for our mortgage clients and had a lot of success with it. So we put a real creative subject line with their FHA loan and their address in the subject line of the email to get it opened. And same basic offer, you know, look at how much money it can save you. We personalize their loan amount, their monthly savings in the email. And this particular client I know sent 15,000 emails out and had like 60 inbound phone calls in 2 days. So very successful email marketing. Again, don't want to spend too much time on that. There's a lot of details in that they would probably want to set up a phone call to discuss. You know, we're emailing the same people that we're direct mailing. So they get a letter in their mailbox, and then a couple days later they get an email in their inbox, and the two things together have really lifted our response. And email marketing is cheap. It's, you know, 10, 15 cents to go buy data, send an email, versus, you know, 60 cents for a direct mail letter. So the combination of these two things has been working really well for us.
Great. Let's talk about this case study results that you're getting in terms of the letters mailed to 12 different states, Jeff.
Yeah, so this was an actual call report for how many pieces we mailed to each state, showing that we had a 0.8 response rate. I mean, you know, almost a 1% response in multiple states that we mailed. So this is an actual call report of something we just did. Dropped 150,000 mailers, got 1,200 unique phone calls. You know, this guy will probably close 100 loans for a mailer that cost him around, you know, 80 grand. So it was $800 a loan. This is, you know, like I said, the actual response out of a mailer. So we've done it in multiple states, but there's a lot of data out there and getting a lot of response on it.
Great. Well, Jeff, you've got some opportunities for Quicken Loans Mortgage Services current partners and others that just decided to stick around for this webinar. Talk about the special pricing and how they can save a few $100 and getting started.
Yeah, so we're talking about, you know, 10,000 mailers. I mean, our normal price to do 10,000 mailers is $6,200. So we put a special $300 discount if you attended the webinar. You know, we'll give you $300 off your first order. It's $5,900. That includes, you know, third-class postage, which runs around $2,900 in postage. You know, the targeted data with all the formulas built into it, and the EMI, and the interest rates. You know, printing a nice letter and envelope, and then giving you a toll-free tracking number to track the response. And I'm showing our national average 75 inbound phone calls. We've had people get 50, we've had people get 100, but 75 is a pretty strong average. some of my clients close 10% of their phone calls. Some close 5, some close 20. I mean, it really depends on how that loan officer is taking that incoming call. But this is a pretty good, average nationwide for all of our clients. You can close 7.5 loans, $1.5 million for a $5,900 mailer and make $31,000. So 5 times return on your investment. And if it works like this, typically my clients will start ordering every month. And I've got, like I said, 15 or 20 references around the country, multiple states that are doing this every month with me. I got a loan officer in Huntington Beach, California that just committed to spend $26,000 over the next 5 months with me. Just a loan officer that's investing in this thing because, he's investing in its future. That's not that common. Most of the people I work with are companies feeding a bunch of loan officers calls. So anyways, that's kind of a special offer. You can call me, email me, and get samples, data, run some numbers for your counties, your states that you're licensed in. That would be kind of next step.
Great. Michael says that they just signed on with Overflow and they appreciate the discount and the opportunity to partner with you. In terms of final questions for either Sean O'Brien or Todd Cart from Quicken Loans Mortgage Services or Jeff Bush from Overflow Works, please go ahead and submit those now. If you'd like to go ahead and get started with marketing, here's the contact information for Overflow Works and a little bit of a 7-step process that Jeff walks you through to show you how you can get your phones ringing. Jeff, anything that you want to highlight on there? And Todd and Sean, if there's anything else that you guys like to add as we take these final questions, please go ahead and step back into the call.
Todd Cart, I think we're good. I know my contact information's out there for folks that aren't currently working with us, and we really look forward to partnering up with Overflow Works and making the phones ring.
Great. Jeff, anything else that you'd like to add?
No, I think I covered everything. If somebody wants to look at this closer, just email me and let's set up a time for a call, and I'll walk you through the details and the data available in your states and kind of walk you through it one-on-one.
That's great. And for some of you that have messaged in about approving partners or having Quicken Loans Mortgage Services partner with you and get your approval, make sure that you use the contact information that I sent over for Todd Cart, and he will make sure that he gets you all the information you need. Otherwise, if you're a current partner, and we appreciate you being on the webinar and learning a little bit more about Overflow Works, and for all of you Overflow Works customers, thanks for your continued support, and we wish you all a very happy Thursday afternoon. Thanks, everybody.